Okay, hi there all. G'day Lauren. Hope we are well on this beautiful day. Well, it's beautiful anyway where I am. Weather's sunny out, so I'm guessing we're all in isolation. G'day Peter. Just in advance, I'm sorry if you can hear, you may or may not, if they're good, hear the kids rambling around down the bottom. So they're home, they've been home for the last week or so. And yeah, not doing a hell of a lot. Yeah, it's a bit like that, isn't it? I mean, it's got to be done, which is the most important thing. But yeah, it's just with the kids anyway. So my kids are 8 and 5, and just making sure that they're entertained is a tough thing. They're pretty good. They're doing really well, to be honest. So yeah, you may hear them in the background. So sorry in advance. So today, well, for starters, welcome for anyone that's new to Trade Setup, or that listens to this later on. What we're doing really is just to focus on. It's mainly the indices at the moment, and your currencies and the things that are going to move the market that we've got to keep an eye on. That's sort of the main focus because when we've been out since, I know with the trade setup alerts and everything we've been out of the market for, I don't know, a few weeks, just when the market was starting to roll over. We got stopped out of our last position, locked into final gains, and then really just sitting on the sidelines watching the equity markets sell off. So in the meantime, we sort of had a focus on, we've had a gold trade, it did really well. We've had a Dow that didn't do so well, lost a couple of points on that, but net over those two are up. And then we had another index alert. So there's still a lot of opportunity out there. Trading the same way we've always traded. I mean, it doesn't have to, especially if you're trading indices, you can go on the short side. It is a lot more volatile, which I guess a lot of you are finding. And if you have had some experience intraday trading, look, there's two things. There's more opportunity, but it's a little bit more vicious, and you've got to have wider stops and all that sort of stuff. So you've got to be careful, and you have to know your risk. I mean, we bang on about this all the time, and if when anyone that's been following what I chat about for a while now would know how I approach my risk and why, in essence, especially if you're trading shares. I mean, and if you weren't doing that, I guess this is a time where you'd be sitting back thinking, why not? But anyway, I mean, that's aside from that, but it's a good way if you're trying to improve your trading. Um, Especially your chart and your technical analysis, because I think that's going to help out a hell of a lot, even if you're a pure fundamentalist, helping out by looking at technicals and look at the global picture. What's the macro picture with regards to what are the US doing? What are the US bonds doing? What is the US dollar doing? They're all affected. What's crude oil? And we'll look at that. What's gold doing? People thought gold was going to bounce, and as this all kicked off, instead it got sold off pretty hard. And if you're trying to put a fundamental reason to that, may not be one there. I mean, fundamentally, gold should have gone up. Instead, it got sold off about $100. So you can look at the technical side of it and why it's happening, because at the very least, it makes you not second guess, but reassess your position on different things. So we'll go over a bit today, and it's more of a recap of what we've been talking about. I think the last few weeks, the morning streams we've been doing, if anyone's caught up on those through TradingView, it's more of a bit of a recap on just what the markets are doing. Anyone saw, I think oil sold off on the open today. Look, could be a washout. So if you're looking to go short, just be wary that we are down on lows. And Saudi and who are they? Russia got the ability to come to terms without anyone knowing, and then pop, you'll see this massive rally in crude because they can turn around and just cut off the supply or production anyway, and just make sure that supply demand is skewed, or it's going to skew price to the upside anyway. We'll take a quick look at that. Looking at gold. Gold is choppy. Let's just get into it. Let me just minimize that. Sorry for anyone that's new. Thanks for joining us, by the way. If you have any questions later on, or on the topics we're talking about, if there's something you just want to have a chat about, send me an email to support@tradesetup.com.au, and I'll get back to you as soon as I can. But I'm not busy trading, hunting away during the day. So I'll just, as a bit of a recap, I'll go over a trade that I had today, which this is on SPY. So coming into the session, I was looking for something to roll over. I just thought there's a bit more pressure. We know what's happening in the US. They're pretty much, just saw your comment, Lauren. Yeah, it's good to have the wife at home. And the kids, they're always in your ear, aren't they? Oh, my kids are classic. I tell them to be quiet, and then look, they do that. They always coming up and tapping me. They're trying to be quiet, but they can't stop themselves from asking questions. So it's pretty funny. Um, so yeah, on the SPY. So what I'm looking for, we know that US over the weekend, their numbers have just blown away anyone else. The number of virus infections. Now they're sort of the epicenter at the moment, and they were talking about locking down New York, and then Trump, decided against it because the New York mayor didn't know what he was talking about. So there's sort of these funny news headlines coming through, but all in all, it's not. I mean, the thing that's pressed the market lower and triggered everything was the sell-off. Sorry, not the sell-off. That's obvious, isn't it? But the coronavirus. Now, me and we've all mentioned this before. That was an excuse rather than the reason, um, and why potentially it sold off. But I think that's going to keep pressure. It's more about the economy and the global economy, the slowdown, and how much. And at the moment, there is no end in sight up until the numbers slow down or the virus. We start get that under control, or some sort of vaccine. Or we talked about this before. So the market will well and truly be focused, I think, for this week at least, on the spread of the virus and whether it's getting contained or not. All right. Now, um, with regards to the economy, I think, or the dollar at least, the big issue why we got hammered, also that the everyone jumping into the dollar and soaking up any supply of US dollars. Now, with all the stimulus, it's not really aimed at, well, it is in a roundabout way, stimulating corporate America or corporations and things. It's more stimulating the dollar and borrowing, making sure those spreads don't. Well, no, the spreads were getting hammered at one stage. The spot spreads for the US dollars were so wide. I mean, people were saying, you'll see them on news feed, you can drive a truck through it. That's the old saying. Now, that was the biggest issue. That was the same with the GFC. They had to control that, and that was a massive stimulus. So anyone who's wanting US dollars is now seeing that it's going to be available. There's not going to be a run on the US dollar, and there's going to be no liquidity left, and all that sort of stuff, or a run on liquidity rather than the US dollar. And now that the US have done everything in their power, and they've just supported, they're backstopping that. So anyone that's countries that are looking for US dollars, they've got it. Okay, so and you can see that in the US dollar. If we just go, let me just say one thing, show that us over. Look at the US dollar. Now that's come off these highs, so we're looking at this. It really kept going. It started to find, once the stimulus kept popping in, and it could, I don't know when it started, but say it started here. It wasn't enough until they got to a point where, okay, that's enough, that's backstopped, and any buys in the US dollar, as it takes time for it to start to close out, for any long start to get squeezed, that will take a bit of time, and it's starting to play out now. We can see that obviously with the sell-off the last few sessions. So there's having its effect on the market, the credit markets, which is a good thing. Okay, so that's sort of the first step, I guess, to recovery for me anyway, what I'm looking at. They backstopped the US dollar. Currencies maybe not so as volatile, and there's probably opportunities on the squeeze. By squeeze, we mean that anyone's position long up here is getting squeezed out at the moment. I mean, the Euro's just sold off hard, and they're getting squeezed, all these sellers into the Euro also. So there's a lot of opportunity there because of freeing up the credit markets in the US, or the US dollar in particular. Bonds, oh, I haven't got bonds. We'll look at those. Don't worry too much about those. Actually, they're just there. Bonds have lifted. I think they're still inverse to the yield, but that demand is still there on the bonds, which is US dollars essentially. So they're going okay, I think. But all in all, I'm just looking at the markets to start these. I think all these things are easy, and that's going to lead on. It's going to be a flow-on effect to supporting the economy, the global economy. I don't think we've seen the worst. We haven't seen any numbers, regards to job losses, regards to there's going to be companies that will go bankrupt. They'll go into liquidation. That it just will happen. I mean, they can't support everything. The governments can't bail out everything and everyone because we have a massive debt bill at the end of it. So GDP is going to get crucified on the back of that. But it's also even for companies that everyone gets, they get through it. Say we still got debt problems later on with regards to corporate. I'm not saying not looking for expansion, but borrowing. The borrowing cost might be higher, or now a lot of corporations might have to worry about paying off more debt than they expected before they can borrow to expand. So all these things that could cap the stock market going forward. I think we're not out of the woods just yet. Look, whether or not we've seen the worst of it, but it still comes back to trading through the GFC or the markets through the GFC. The initial thrust down, and we got that there bull trap, you call it. So bull trap is when you've come screaming down, we start to bounce, drag it in the bulls, turn around and squeeze them straight back out again. And that's what happened during the GFC. It was a big bounce. I think a lot of people are sort of looking at that because you've got to come to a point where, let's just go over here. You've got to come to a point where sellers run out of steam. I mean, for no other reason, but they just run out of steam. Okay, anyone who's sold has sold. I mean, it's not infinite. And anyone who wants to buy is starting to edge into the market. Okay, so you get that swing between sellers and buyers. Now, that everyone's looking for a reason, but the way I look at things is not particularly. There's reasons why it's driving it lower, and if we always go past fair value on the downside, and always go past fair value on the upside. It's just the way nature of it, and that's not because of fundamentals. It's not because of global macroeconomics. It's because of psychology. Now, psychology is going to drag the market up and push it down, and all so on and so forth. So I think the fact that if it can't go down, people start viewing that as, okay, it's the time to buy. I mean, we're all taught that. Everyone's been drilled in by stock, I'd say, full service share brokers. Buying the bounce, it's always cheap time to buy, And if you thought that during the GFC, you saw it bounce, and then all of a sudden you went from 5,800 down to 2,700. You could have got it a hell of a lot cheaper. So it's not, to me, it's going to be hard to sit and watch a bounce if we're not looking to jump in. I mean, not saying I'm not looking at shares to buy just yet, but I want setups. And at the moment, there's no setups with momentum. It's just a bounce, straight out bounce. Now, that's not sort of my ball game. And I'm happy to just to trade. I mean, we could trade the index on the long side. If there's a good bounce, we just trade the index. So if we do miss out, there's a bounce, and stocks start to set up to my liking, I've at least got something in the bank with indices, or you could trade the STW, which is the ASX 200 as a share, as an ETF. Sorry, you can trade it, so you can buy it on your share account, or you can trade the CFDs on the index. You can trade the futures. So there's all options. It's a multiple different way of taking advantage of the upside. If you're not confident, to start jumping into the stocks at those levels. So I think what people would be waiting for is the data to start filtering through job losses, growth, GDP, and all these sorts of numbers, which it hasn't yet. The US just got a bit of a hit with their most recent number, but I think that's just the tip of the iceberg at the moment, the way I'm viewing it. So yeah, you're going to get a bounce because a lot of that might be factoring in, but people are trying to factor in something they don't know yet. And if it's worse than they expect, just expect a bigger sell-off. So, and we're not going to know the job losses until we get the end of the coronavirus, so that comes under control. There's too many factors that haven't changed, is why I'm sort of viewing everything as a bit of a bull trap than anything else. I don't think we're at the bottom. I don't know what everyone else's thoughts are, but feel free to chuck it in. If you disagree with me, I'll just mute you. You know what I'm like. I don't like to be told I'm wrong. That's why I don't talk to my wife. Anyway, that's not fair, is it? Hopefully she can't hear me. So here we got the ASX. Let's just get rid of that. Just some notes. Anyone that actually, as just a side note, before we look at the ASX and we look at a few of these other markets, this is it's a good idea to get yourself in the habit. Write some notes. When you're trading, look at things. Take a snapshot of some charts if you're doing it, because it's only ever going to help you, and it's going to help you trading too. One thing, that's the first out of two, obviously. It's going to help you trading, and secondly, when you get a bit, I'm not saying down on yourself, but when you go through a bit of a bad patch, what I tend to do, I had a bit of a rough day on Thursday. Okay, I just read it wrong, and it was, even I say more often than not, don't trade from what you think or have a biased opinion. Trade from what you see. And I was going long when I saw the market going down, but for some reason I had it in my head that we're going to get a bounce because of that stimulus package in the US, because it bounced last time. Instead, the market headed south, and it was just a big squeeze of all the longs. So it was a bit of a setup. I saw it. The stupid thing is I saw it coming, and still sort of went long. For some reason, it was stuck in my head. So that Thursday wasn't so great. Didn't trade Friday, and instead, so what I tend to do if I have a bad day or a bit of a bad run. I mean, it wasn't bad, but it was just annoying. So what I've learned to do now is cap that, knock it on the head as soon as possible, rather than go through a couple of days, or that couple of hours of bad trading can turn into a day, can turn into a week or a month. I knock it on the head straight away and go back and look at charts. So what I'll do is look at and mark up a whole lot of bits and pieces on the chart. What I'm looking for, just to keep reminding myself, look at some good trades that I've done in the past, and why it worked out. I'll put some notes on there. So that's what I was doing basically on Friday and on the weekend, just reassessing it. And so sure enough, today jumped in and made 16 to 20 points, I think, somewhere around there on the SPY, a little pop on the SPY. So look, it just gets me back in that zone of what I'm looking for, make sure that I refocus. And I think that's a good thing to get in the habit of doing. So let's just delete all that now. Probably should have got that somewhere else. So this is an hourly chart. And one thing, it's the XJO, yeah. One thing, this is a big sell-off, okay? So we can look at a daily, but there's not as much detail on the daily. And when you got the algos and everything ticking off on the downside, you get a lot more detail when you drop it down from a, say, weekly to daily to intraday, say, hour, 30-minute chart. What you can see I've marked up here, this is, let me just go back to a daily. Just figure out where this zone. So this zone come from, it's a zone down here from back 16th of Feb, and then was it the GFC? 2013. So it's not a serious, it is a serious zone, but you can just tell that it's, touched down there once, we launched off there, come back down and retested before we got this big run up, and we come back down and we have broken that zone. But depending, the reaction off it is still in a way confirming that zone, but we're looking at a few different elements, with regards to that move down, of why particularly that could be confirmed. And one is obviously you just break it down to the intraday, you can see that chart has been pretty consistent, lower high here, 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 jammed through that level, and we've come straight back and broken that. So to me, that's the anchor to the downtrend for continuation. If that's broken, like we always say, you've got one or two things going to happen. You're going to go sideways or you're going to reverse. And if there's enough fuel on the downside, you know that it's probably going to be a reversal. All right. So if there's just a minor thrust lower, then you got that trend break, and it could consolidate. It might even grind higher slightly and then roll over. But with such a big move down from, what was that, up at 7,200 down to 4,400, that was a massive sell-off. Anyone who hasn't got out is probably not going to. If you're just putting your shares back in the bottom drawer and forgetting about it for a while, or anyone that's been short potentially is reassessing it. And this could be the time when a few shorts are squeezed out of the market, depending on what shorts you're running, whether you're running, major swing shorts, as in major levels, so a couple of days, a day, a week, or you're running intraday. Intraday generally in and out, at least the same session, generally, long with sort of overnight. A lot of people have overnight swings, short or long. But if they're short, they're probably out the first thing in the open because they're just waiting to see what happens in the US and taking something's popped up. They're expecting a positive night in the US, get out the next day. But generally, they're not holding for too long. So there's this sort of thing where, if you're going to be shorting the market, and you're probably squeezed out, or you're on the sidelines watching it because we've broken through. And that, for me, this is the key. If we can get that up, the key point. We've gone through this anchor at around 50, say about 5,000. We're starting to grind back up now. I think we've got a bit of work to do. We might have to chop around. You have a secondary leg up, but this is all what I'm seeing for a potential bit of a bounce. Now, it's too early to assess whether this bounce is going to be sustained, or it could be the end of the month bounce. We're the 30th now. We go up to the 30 or 31 this month. I think it's 30, is it? 31. All right. So whether or not this is the start of a more of a bigger pullback, we don't know. So it's all relative at the moment. If we go back to a daily, it's just we've driven into that session, that low around 45, 4,600, say. We bounce, we've broken the anchor to that downtrend on that daily, push back up. We may start chopping around, push a bit lower, build a higher low. And by that, I mean, we might drive down again and then start to get this action and have a deeper correction back up. And then what I'd be concerned about is if we come back and build another lower high. So this is all a big pullback. wash out a few of those shorts or get some buyers loaded up, and you know it's going to happen. Everyone will be looking at this bounce and Sophia of missing out, FOMO we say, on the bounce, thinking, I've seen the bottom, that's it. All right, I'm in. This is going to be great. I'll get a good price. And then they sort of forget about it. The market gets sold back down. I mean, I'm not saying if this is going to happen, it's going to straight back through support. It could bounce back off there again and retest. If we get a secondary retest after a big contraction back up and you sort of start to build that double bottom, then that's a much better sign for higher levels and more of a prolonged rally. But I just think because nothing's changed what we were describing before, the macroeconomics of it all, as in job losses, companies, there's going to be corporate defaults. It has to be. I mean, no one can sort of weather this storm, and if they don't get the coronavirus under control, that just works on the isolation for a lot longer. Companies under more stress, more debt. The government can't just keep paying out, bailing things out. So that's what we're facing, and there could be a bit of a bounce, a squeeze, and then a bit of a bull trap. So this is buyers loading up, jumping back in, and then trapping them and squeezing them back out. So if that's the case, and there's nothing much has changed in the economy, we're starting to see these numbers filter through a lot worse than we expect. Expect that to go through that zone and be a bigger pullback. So if we just go to a weekly to see where, let me just show. So this is the longer term trend. I mean, that's another reason why particularly we could extend a bit lower. We could drive down to 4,300. We might drive down there to this zone in here, which is just below 4,000. We don't know yet. I just think it's for me, a little bit too early to start diving in on the long side. And I know that I've got a bit of flack if we do start to rally and we're not jumping in, but that's, I'd rather be safe than sorry. We've got enough buffer, well, a lot of buffer really to not worry about too much. But again, if there are some shares, which we'll look at that in a minute. Lawrence just chucked up some. We'll look at those. There are some shares that are setting up. That's the way I like. I mean, you've got to just jump in, I guess. It's probably the words I'm looking for. Jump in and have a go. I'm just trying to, why is it not? I'm assuming that everyone can see. Yeah, it's better. All right. So that's it. Let's just quickly look at the things that could be pressuring the market, and SPY's still going up. So, whoops. So you can still hear me loud and clear. What do I want? I want this here. There we go. Now let's just go back to. I've got an hourly chart. So gold's a funny one. God, it's got choppy, and if anyone doesn't believe you got algos and things can tear a market apart, look at gold. Look at this, that was all, for me, that was nice. We got that sort of bounce and it started to trigger up. Then you got the algos starting to kick him in. Look at these really wicky on both sides of the market above 1600. It was starting to get held up. So I thought that might have broken down a bit more. This is pretty much where we got stopped out of our long, which you can see by about $1 or $2, which could be frustrating if it takes off, but maybe neither here nor there if it does start to roll over. You can see the market's made a minor double top at 1643. It's tried to go again and starting to go down. So I feel if we can't hold 1611, we're going to start attacking and potentially break through back down below 1600 and start to squeeze the longs out that are built up. This could be a bit of distribution. Two things: distribution for a rollover or accumulation for another rally. It's consolidating up at these highs. Again, we've got our levels marked up. Potentially, like I said, I'd probably prefer a break through 1596 and the first pullback to sell into as a short, or a bit of a break up and that first sort of pullback to buy into. That makes sense. So you've got two scenarios. Something jumps down here, something like that for shorts, or we're going to be playing it on this side, maybe like that. And if that's the case, so we had the big rally up here, accumulation and consolidation through, above and below 1610, 15. Look for that higher low, and I think that could, especially if this consolidation takes a while, that's going to be a good sign that it starts to break up. There's a lot of buyers in there, and that should be, just because it's below that high, this previous high is at 1680 to 90, or just say sit below 1700, that could easily jam straight up and through 1700. And then you've got people chasing the tail, chasing it up. So we'll see how that plays out. That's that's gold. I'm not bullish or bearish just yet. It needs more price action for me. Crude's smack down on the open. I was actually looking for that as a bit of a short squeeze. So short sort of pushing down here to jump up. But I think everyone's just happy to sit on the sidelines for now and wait to see what happens with supply. Because, I mean, if supply is still high, Saudis are still pumping it out, getting annoyed with Russia not doing anything about it, not coming to some sort of terms to cut back on supply, and they're happy just to keep going their merry way, then this market should keep heading south. But I think it's going to get to a point where even the Saudis come under pressure at, 15, 16 bucks a barrel. They become, I don't know what production cost, the net effect is on Russia. I thought it was somewhere 40, 50 bucks a barrel. So they could be well and truly under pressure. I don't know why I don't know why it's all happening, but at the moment, this market's still heading south and there's not that short squeeze yet. Wanted to see a pop up out of this contraction lower, pop up and look for a high low to buy into. Pretty much like gold here, selling down, started to get this high low to play into, and we bought into that, a break up from there out of that high low. So crude would be the same sort of approach, except it's just not happening yet. It's still heading south, so we'd have to reassess it and give it some time. Copper. Now, copper is also a bit of an indicator of what the overall market thinks. And that was starting to look okay, but for me, it's starting to look heavy again. If you just drop it out, say go to a 4-hourly chart, that for me looks like it's found some resistance up here at 222 or 223, and it's rolling over again, ready to test below 2, potentially. Okay, if we go to a daily, just go to a daily chart, we're right down in this zone here, and it's tested down at the zone. So whether or not, if it does move down, I'm pretty confident it probably will, but whether or not it's a break of that low going to new lows, or we're going to start finding some support, off this zone again. Because it is, it's been fairly cheap. It's cheap for a while. It copped a bit of a beating because of the trade wars, and now copping a beating again because of the global slowdown. And the longer that takes, the less likely this is going to start to bounce. Probably the one thing going in its favor, I'd say at the moment, is a weaker US dollar, priced in US dollars anyway. All right, that's probably about it, really. Anyone else got anything you want to quickly look at before we jump into some stocks? Jump into some ASX stocks. There's something else I was looking at. Don't remember now. Anyone crypto? Crypto. This is the Bitcoin, which I don't, probably a lower time frame. That's under pressure. It's pushed down, and I thought this support may have held up, but it's been washed out. So anytime you sort of get a bit of, and it doesn't hold, so buyers should be buying off there. Instead, they're getting flushed out, and it's popped back up. That's dragged in a few buyers, potentially for another bull trap. The bulls are jumping in here, expecting crypto to, Bitcoin to take off. Instead of starting to roll over and be turning around and squeeze them all out. And then if this holds that lower high, that region around, say, 7,000, for me, that's going to roll, especially if we start getting a lower high coming into play. That's going to drag in. I think there's some buyers that might buy it off this zone at 57, because there's just a lot of people will do that. And if we start getting that pop up and it runs into some more selling pressure at a lower level, I'd either bail on those longs or be looking for a short. And that could easily press down to below 3,500. So I think Bitcoin has got a lot of work to do. And if you look at the others, they're probably, let me get rid of some of this stuff. They're under pressure, and a big sell-off here. It couldn't get a move on. So when something's going from oversold to overbought, what am I talking about? Overbought up here to oversold, and then it goes back up to sort of that overbought region, and we get nowhere near those highs again. There's still a lot of pressure on the price. All right, so just sort of forget about going for long-term long at least. And I'd say a lot of the other cryptos are very similar. All right, let's get on to some shares. How are we all going anyway? Is anyone diving in the positions, or are they just sort of waiting just to give it a bit of time? All right. Just 1 second. Just going to type something out. All right, so shares, let's get into it. DEG. the grey mining holding up okay. I don't know what do they do? Are they gold? Gold, all right, generally. All right, so that's the weekly's next to useless. Yeah, there's nothing really to worry about too much there. But the biggest problem for me, let me just get up the charts, just draw a few bits and pieces in there. Penny dreadfuls. You and me both, mate. It's always good having a bit of a nibble when things are great, some of those little small ones, but when the market gets sold off, it's not so great. They tend to go into hibernation for a long time. That's what I want, don't I? So it's a tough one because I don't think any stock does well, when you've got a meltdown and such. But we've got these levels up here around 27 that even with the gold push, it's opened, traded above it and rejected it straight away. So that for me is not a good sign. Your next level is around 17. The trend is still up. You've got volume easing off and momentum starting to ease off again. So for me, if that momentum starts to go back down and test the lower boundaries, then I'm expecting this price to come down and potentially test. Now, it'll be a good sign if it pulls up short, say at 20 over the coming days or weeks. That would be great, and especially if you start to see gold being supported as well, then they could go hand in hand, and we might see a bit of a rally up through 27 and kick off. You want to see that supported with a bit of a lift in volume, obviously. Okay, but yeah, these are the key levels. It comes straight back through 17 and breaks that, just forget about it for a bit. And that's the way I'd be attacking that. We might need a deeper correction to wash out some more of these longs because that was only the start of Feb. It started taking off, and anyone that's long in here or at least below 17, anyone that's sort of long through this zone, let me just draw that up nicer. Anyone that's sort of long through here is not under pressure at the moment. Anyone that's pushed it up, bought it in that zone on that rally is not under pressure. So we may need to squeeze a few more out. There could be, with this kind of price action, what we're seeing here, there's going to be people taking some risk off the table. Because you just don't know what's going to happen. Gold might fall in a hole again, and then and the Aussie is coming down. So the Aussie's getting more, should help gold in Aussie dollar terms. But if that starts to rally and gold's not going anywhere, expect this to come off. All right, so that's the view on that one. We'll see if we've got anything else. Lawrence, always good for a few good charts, aren't you? Zuno. Look, the weekly doesn't look bad. It's not so great there, but you can see what I'm saying. It's got rejected around that 250. We had a bit of a flush lower. Bounced off the MAs at around $1. So if we go back, so it was off $1. So that's sort of longer term MAs. We're bounced up. So if we can hold a higher low, and even if we retest back down to 30 and start to lift again, that would be a lot better sign. All right, let me just go here. But again, it's about that volume. You can see that volume edging lower. As we get, there's no one can argue it's a bit extended up here, well and truly extended. That was before the big meltdown. So is there enough confidence to come and buy it? Considering what we're doing, we're down on its knees, or is there going to be some bargain hunters? Potentially, yes. We don't know just yet. It's a small stock, so it could go south. If this market gets sold off, I'd expect that to probably head south as well. So there's a lot of people that would have been caught up selling up at those highs if the market starts to, when the market started to roll. But it's these levels through here you want to be seeing if this level can hold, even back down to sort of, let's just take it there. Let's just draw that a bit nicer. That one, so that potentially some buying in here, which would be nice. It's rejected off that one from the longer term, but there's nothing saying that can't be a lower high. So what we're looking at, so that's $1. We pressed down, we've rejected. There's nothing, so from here, nothing to say we can't just keep selling off and go right back down and retest down to 40 at the moment. What ideally you want to see is that being held up and soaked up. And if you can get some higher levels being soaked up, this could start to roll it or to run again. But I think that's going to marry up with a run in the overall index. If fear starts kicking in again, I'll be steering clear of most. I'm not willing to put risk on the table if the market's going into a bit of a meltdown again. I just don't think it's worth it. I think I'd rather play it safe every time because I know that there's going to be enough fat in a rally where we can trade on the long side with confidence rather than um, basically just guessing, I guess. We're guessing that the market's going to bounce, and V-shaped recoveries are not very common. You generally want to retest, especially after a massive sell-off and the massive issues we've got at the moment. The market will want to retest, and that will want to hold because that's the weight of numbers that are happy to put that in as a base. And it's not. If we do get that like a suckers rally or the bull trap that we're talking about, then to me that's not. That could be easily done on low liquidity. There's not many people buying, so you're starting to jam it up, and anyone that wants to sell is just waiting for it, and then selling to that strength and getting out and going back on the sidelines. So there's too many things. If we can retest a level, especially on the index, and we hold, then things like this could be the one to go for. We start to hold at higher level, and that starts to play out with regards to what's playing on the ASX. But if ASX is going to meltdown, I'm more inclined to believe this is going to happen, a sell-off, or at least get lower highs as it gets sold into as the ASX doesn't hold up. Does that make sense? Elders. But I might get you to, I think, Lauren, you might have done some good research, put together a list. It's things that we can keep watch of. Now, Elders is a funny one because if you look at not a funny one, it's not very funny, but is it here? That massive sell-off. I mean, I don't know what the fundamentals are, but it got smacked a long time ago, and it's basically not quite recovered. But this on the weekly is a clear low at 550, which if it's broken, and I think the fact that it got smacked a long time ago and it's cleaned out a lot of people, it's rebuilding. All right, and I think they're still going through a rebuilding phase, which is not so bad considering the market environment. And you can see that it's holding up under this weather. So potentially this could be one in the near term, which if it can hold off 750, it can hold up and start to lift through $9. Oh, we'll just go back out to here off the weekly. But I think it's obviously copping a bit of a barrage like everything. But look at the days, gapping down, pushing up, gapping down. Let's just go back a bit closer. These days here, look at that day, open on its lows, rallied, open its lows, rallied that day, got sold off a bit, okay? Because once the buyers in here are starting to recognize that it's not quite holding, let's just step back for a bit, and then they might want to come back in a bit later on. So they need more confirmation. At the moment, we haven't got confirmation that it's just over yet. No, that's not what I want. But let's look at that. There's a few things that we keep an eye on. That's obviously the pullback, right? And the market's trying to find some support where other buyers are willing to jump in there and support. Don't mind all this price action. You can see oversold down here, and it's trying to get, trying to find some sort of support. Let's take that back through here. There's a zone around that 720 mark. Okay, it's bounced off there before. It doesn't mean it's going to hold up. It's flushed out, finished above. Pushed through again on that day, finished above. Bounced off it strong today. So there is buyers in there, you can see. Although the buyers are easing, that volume is still coming off a bit. There is some buying there, but whether it's over, we don't know. I mean, there's still some selling too. You've got selling. There's no doubt there's still some sellers coming in. So they could easily, buyers give up again, take a breath, and that market gets, like they did in here, take a breath down here, and the market gets sold straight through. And then we're looking at lower levels, all right? So we haven't got any confirmation that's going up just yet. And if you're buying there, you're basically just buying off what you're expecting to hold up, and that's not trading. That goes back to guessing what you think the market could be doing rather than waiting to see it play out. And so ideally what you'd want to see is that, say this is that zone through there, what we want to see is it break up, and then see what happens in the first pullback. The first pullback gets soaked up at a high level, then yeah, it could be a goer. And again, I think it's going to marry up with what's happening on the overall ASX. Even if it is just a bounce, this one could be a goer. I mean, if the market bounces and you get these stocks like this that start to rally, that start to set up, I think we're going to have to jump in. But in the back of your mind, you've got to have it that we haven't really retested on the ASX. And depending on what data's come through, jobs, all that sort of stuff, GDP and all these sorts of figures that are coming through, have we seen the worst of it? If we haven't, and the market's starting to rally, I'd be having tight risk on this one. It's not the environment to start having loose risk and just go, okay, we can buy this for the longer term. When just because it breaks up here, we could get up to 880 and then bang, market falls apart again. Before you know it, you're back down at $4 or $5 and you've got to lose it. I'd much rather in this environment lock away some gains if it can get, and just see if this can get a run on, say this does that and it just kicks on, great. If it doesn't kick on, we get up to these highs and we start to fail. Again, risk below the most recent high low, and then just see and just reassess it. But I think that's the way to attack this market at the moment. If there is some stock setting up, obviously we're going to look at what the macro picture is doing with the ASX and global markets, starting to go on that bounce where we know that's going to be a bounce because people can't help themselves. They're going to be looking for that bargain. If there is a bounce, if that marries up with some good setups, then it might be worth taking it. But just bear in mind that it could be short and sharp, rally, and then bail. It's what happened on, ASX is probably still going up, is it? Where are we at the moment? Yeah. All right, just want to see where that is. So does that make sense? We'll be setting up. No, I think they're with those, Lauren, I think they're, it's early stages, but they're on the right side. You can see that price action recently above 7 is getting soaked up a bit. And if you just take a step back, maybe the daily is the hard one. You don't really want to buy it off the daily, but look at more of that action on the weekly. That's, this is our traditional entry criteria. Just go back to this weekly on Elders. And I think I was looking at it somewhere in here, but it hadn't broken. I don't know where I was looking at it, but anyway, I could be just talking a bit of rubbish, but you can see a traditional criteria. We've got contraction, this run up, pullback, run up, can't get through the highs very much, takes out that low. It could, that at that stage could have been a retest or not. Then you get this run up, it fails. You look at these levels, given a good nudge, fails there. Then we get a deeper correction, but then it wasn't really that deep, to be honest. We only got back down to about 550, so it's still getting soaked up. Then you start to get these bounces. You get this level, bounce up here, pull back, high, low in here. Good, probably a good entry off, $6. But the thing is, it wasn't on the weekly chart. Maybe the daily could have been a lot better, but on the weekly, it wasn't breaking out. So the best we could be looking for was potentially a move to 720. And in all honesty, it got straight through there. So kicked on, broken up and out of that contraction on the weekly, but we haven't started to get the setup we like. At this phase, we've just broken up and we're pulling back, that pullback at the moment. All right, so on the weekly, if we can start to hold up at a higher level, and it might take some time, then I think that weekly is going to be a nice, powerful move, which could take it straight up through to 9. But again, it's going to marry up with what's going on with the global environment. All righty, so that's that one. Anything else you want to take a quick look at? I'm not seeing a hell of a lot. Look at this ASX now. Just as a note, ASX could roll over coming into the close, and that's got me a bit concerned. Look at this. I'll get that on an intraday chart. We'll touch on this, and if there's nothing else in the way of shares, we'll just finish off with this ASX into the close. And just because we're green today doesn't mean we're going to finish green. We could get sold off. 100 points to be given up in a few minutes. It takes us all day to get there. Up until now, what's that? 10, 11, 12, 1, 3.5 hours to get there, and then boom, gone in minutes, the way this market is. But what I was just having a look at, index, come on, that one. All right, so this is the 30-minute chart. And if we mark all this up, we could be looking for another move. I don't know. I'm just a bit wary that we're going to keep punching up from here. This is what I want. Let me just draw this up a bit better. So you can see that downtrend, all right? It's pretty much broken, that downtrend, and we've had this little run up off the low, which to me could be broken as well. So it's more a few things I've just got my eye on. I don't believe that just because the market's been going up, and if you look at the SPY, have a look at the SPY, it's not strong as such. So that's the run up. Now we've broken that down. We haven't really, we've just gone through the MAs. And for anyone that doesn't know, if we're looking for a sell, you want the market go through the MAs and the first sort of pullback holds the MAs and starts to drop off their MAs again, like we have here. It's a deeper correction here, like we did here. All that same sort of price action. Now this rally is pushed above the MAs. We had that little grind up, retest, pop, retest, pop. And now we push straight back down below the MAs. And for me, potentially we're retesting those MAs on the 30-minute chart. So if that's the case, we could easily roll over from here into the close and start a new leg down and start to retest down to 44. We may just retest back down to 4,000. We don't know just yet. And what are we now? 4,000. 4,000, did I say? 48. 48, which is another 140 points away from here. If we break this chart down to a 5-minute chart, you can see that grind up. Now, after this sell-off, this grind up is not very strong. It's not conducive to a bull market. Remember that sort of, how do we say, where we've got something like this, grind up, that pullback, grind down, bang, up we go, grind down, up we go, grind down, up we go. This is the opposite. It's pushed down back below the MAs. We're popping back up even on that 5-minute chart. We're just sort of hovering just above those MAs. No reason why we can't sell off. Like we rallied from here below, same sort of thing. We could drop from above, easy, because it's a 30-minute time frame that looks like it's under pressure. And it's the first retest from below on the 30-minute time frame. So just be aware, if we do sell off from here and we start to get that lower high below the MAs and the 5, for instance, that could be an attack on those lows. I'd say we'll probably go down and at least test 48 by the end of the day. Well, maybe not by the end of the day, but anyway, I don't think it's a big buying opportunity today just at the moment, even though it is grinding higher. So I hope that all makes sense. Probably knock on the head there. We'll finish up. If there's any topics you find interesting that could be worth covering for next week, same time at 12:30 next Monday, just shoot me an email and then we'll take a look at it. Because at the moment, sort of biding my time, just keeping an eye on these markets, just trying to point out a few things that I see important to keep an eye on. But at the moment, any sort of change may take a lot of time, so we can touch on different things. But anyway, thanks for joining me. Be much appreciated if you can leave us a like on the YouTube channel, or feel free to grab the link and forward it on to your group if you think there's some people that are interested in listening. Yeah, no problem at all, Pete. Just give me a call, mate. If, like I said, any questions, send us an email to support@tradesetup.com.au. All right, guys, enjoy the rest of your day and the rest of your week. And we'll be probably doing a short, quick stream tomorrow through TradingView. So anyone that's subscribed or has got a trial through the app, I'll send out a push notification on that. All right, guys, enjoy your day, and I'll speak to you again soon.